Right, learners, in this question 4 in your study guide, I want to have a look at this 4.5. The cash effects are on financing. Now, what I want you to notice, first of all, that this question 4 is largely based on ledger accounts. Yet, in this question, they are actually asking you something from cash flow. And that's very important for you to realize that when you get to your final examinations, that you're going to have topics assessed across different sections. So it's not just going to be a question on ledger, for example. This has got ledger. Yes, it's also in fact actually had notes to the financial statement, and yet it's brought something in from the cash flow as well. On top of that, it is only one aspect out of the cash flow that has been assessed. And so you've got to know exactly what is being tested when they look at financing activities without doing the whole cash flow. So before we do that, I want to go back and look at what is meant by financing of a business. The financing is a raising of the funds that you require in a business in order to operate. And those funds can be arranged through two main sources. The one being the owner, and in the case of companies which you're dealing with, these will be your shareholders, and the other being from loans or borrowings. So when we're looking at financing, we're looking at how a business raises its capital, whether it's from shares or whether it's from loans. Remember that the owners, the shareholders, are looking for a profit, and the loans will be carrying an interest. So now we need to look at how this particular company finances itself through its shares and through its loans. So let's start by looking at our share capital. You're told that at the beginning of the year you had 1.8 million, and by the end of the year, the financial year, we're not told the figure. What we were told, however, is that right at the beginning, if you look right at the top there, learners, you'll see that you had an authorized share capital of 1 million. Now remember, the authorized is what they actually can issue. It says to you that 40% of the authorized shares had not yet been issued on the 1st of July. So on this date, 40% had not been issued. In other words, 60% of your 1 million shares, in other words 600,000, had already been issued, and they brought in an amount of 1.8 million. You're then told that on the 31st of December, the unissued shares, the other 400,000, were issued at 500 cents per share. Now, if you have a look in the memo, and I'm just paging over to the memo here, you need to draw up the share capital account, but I'm just going to use it to explain. You had the 600,000 for 1.8. You are now issuing another 400,000 shares at 5 Rand each. So you've got an extra 2 million. Now that 2 million Rand is an inflow of cash. That is cash that is coming into the business. And so this is going to affect your cash flow as an inflow. However, that's not all you were told. If we go back to the actual question, we were then on the 31st of March, the directors decided to repurchase 120,000 shares at 620 cents per share. Now, I have already revised the buyback of shares, so please go back to that video if you're not sure about it. You paid back 620 cents, but some of that will be to refund them on their shares, and some will be to refund on their retained profits, the profits that the company had kept back. So remember, just quickly, you've got 1.8 million and 2 million, 3.8 million, and you've sold 1 million shares. So your average price at this stage is 3.80 Rand. 3.8 million divided by 1 million, so it's 3.80 Rand. Now, however, it did say to you though that you actually sold these shares over here. Just remember, you sold the shares here for 620 cents. That's 6.20 Rand. So the difference is what is coming out of your retained income. For the purposes of the cash flow which we are looking at, the cash that is going out at this stage is the full R6.20. The money that is coming out of the share capital and the money that is coming out of your retained income. You are paying out. And if you look over here, your repurchase of your shares was the total amount that's going out. The share capital, which was the average, plus the share premium. Remember, this is your bank account. You're looking at how much went out. And then, of course, the proceeds of the shares that are in your cash flow, that's the money coming in. So that's why it's in inflow, it's in brackets, whereas the repurchase is in brackets because you paid for that. Right, now, the other part of financing is when you raise capital to taking out a loan. Now, you were told here that at the beginning of the year you had a 400,000, and by the end of the year you've got 320,000. And there's no other information given to you. If you look through the points here, there's nothing else given to you on loan. So your loan has decreased, which means that you've paid it back. It's an outflow of 80,000. Now that on its own is simple enough, but what you need to be careful of is that they could have given you extra information and told you that you capitalized interest. Now, if you're capitalizing interest, what I'm saying is that you've got a loan of 400,000. If they told you you capitalized interest, capitalized means the interest has been added onto the loan. So you would have been plussing it. So your loan now would be 450,000. Remember, learners, I'm just saying if they had told you. It's not the case in this question. Now they tell you, though, same as with this exercise, your loan is actually 320 at the end. So it went from 400 to 320. Part of that was because you added on interest, which increased it. And if you take 320 away from there was an amount of 130,000 that would have been repaid. So as we've got it now, we've just got 400,000 and it's now 320,000. Right. Your loan has gone down then, in that case, by 80,000, an outflow. But just be alert and watch if they do give you capitalizing of interest. Now you need to practice cash flows, and as I said to you at the beginning, it might come in a form like this where it's out of context, it's included in ledger and that, and it's only on financing. Or as you'll get onto other questions, you'll get a lot of questions to do with the full cash flow or parts of it. Now cash flows are very, very important for you for the examination. So keep practicing.